Good evening, everyone. Welcome to the Saturday Night Investing Stream. Got some interesting stuff for you. So before we go into it, please take a moment. Sorry, I don't know where the reverb is coming from. Give me one moment. Found it. All right. Please freeze the video. Read the disclaimer. I am not a financial advisor. I'm not your financial advisor. I repeat, I am not your financial advisor. Take everything I say with a grain of salt. Please do your own due diligence. This is for entertainment and educational purposes only. So, with that being said I had something for everybody tonight. I just finished writing a 2,613 word post for X, which will be going out live in about 3 minutes when I'm done tagging people. I'm not going to tag the world, but if people have suggestions, I am reading the chat, and then we're going to go through this. Why can't Chris Patel be tagged? What the hell? What the hell's going on here? You know, Chris has got screwed up for everybody, I guess. Maybe I'll do it this way. There we go. Okay. I figured out how to do it. We got to get Matt in there. Tanner. And I'm going to read this to everybody. It is pretty crazy. I actually spent an hour and a half on this, so I hope everybody likes it. I'm expecting the bears to go crazy because they are wrong on the AI revolution. So this is part 3 of the crazy posts I put out. I can't tag Hager, so I don't want him getting in trouble now that he works for a public company. All right, give me I'm going to go back in the chat. Give me some suggestions. I got to tag Dom. What the hell is Rinaldi's Twitter? I can't even remember Rinaldi's Twitter. I'm not going to say which thing I'm laughing at, but that's not nice. Let's see. We are going bear hunting. There is no question about it. I don't know if I want to tag Burry. He's going to see it regardless. People are going to tag Burry so hard on this. I can't tag Sir Joseph Carlson. He has blocked me. I cannot. I put something about Costco in here too. Not much, just a little. Thank you everybody for being here. We'll get into the show in a few moments. We're going to start the show by reading through this crazy post I just put together. I'm just trying to figure out who else I should put in this. So bear with me a moment. I'm actually going to open up another X tag. I want to see who I tagged in the original. So just give me one moment. All right, let's see. Oh, we got to tag Ives. Tom Lee, tag Tom Lee. Who else? LeBron James. Oh, that's funny. I don't think LeBron cares about what I put on X, to be brutally honest with you. I wouldn't mind having a conversation with Bird. I don't think he would talk to me, but I wouldn't mind. I'll talk to anybody. I just disagree with the whole premise. I'm not gonna, no, not Kushner. What's Camillo? Chris Camillo. What's his freaking X? I know I follow him. He'll like this. At Chris Camillo. All right, so here we go. I got Amit, Chris, Matt, Tanner, Tevis, Roy, Brad, Sam, Dougie, Dan, Tom Lee, Chris Camilla. I think that's good. I can't tag Sir Joseph. Oh, Gershner is a great idea. What is Gershner's X account? I know I freaking follow him. At alt cap. Okay. I am gonna have to unpin that. We're gonna send this. I'm gonna read this. All right, so here's what we're gonna do. I have it teed up. I'm gonna read it, and then we're gonna do a poll to see if everybody likes it, and then I will hit post. It's gonna be a little long. We're workshopping it together, everybody. All right. You guys kill me in the comments. You guys are hilarious. All right. So here it is. Dear AI bears, thank you for the false narrative and the cheaper prices, part 3. I'll start by thanking the AI bears for grasping at any detail, no matter how small, distorted, or taken out of context, when building their case against the AI revolution. On Wednesday, Oracle reported Q2 earnings for the 2026 fiscal year and gave the bears something new to cling to. Oracle has decided to go all in on AI and cloud, but it is doing so by tapping the debt markets rather than primarily funding this build out through operating cash flow. In Q2, total revenue came in at $16.1 billion, and we continue to watch a legacy technology titan transform itself. Cloud IaaS and SaaS for infrastructure as a service and software as a service, for those that are unfamiliar with acronyms, accounted for $7.8 billion of total revenue, up 34% year over year. Meanwhile, the on-prem and software licensing business declined 3% year over year to $5.88 billion, highlighting the continued shift from legacy software to the cloud. Cloud infrastructure generated $4.1 billion in revenue, up 68% year over year, while cloud applications grew 11% year over year to $3.9 billion. Oracle is staking its future on cloud and AI, but the issue has become the funding approach. Bears have repeatedly cited the scale of hyperscaler CapEx, and Oracle just increased long-term debt from $82.24 billion to $99.98 billion. Citi published a research report indicating Oracle may need to raise $20 to $30 billion in debt annually over the next 3 years based on the company's expansion plans. The bears finally got what they wanted. They can point to Oracle and argue negative net liquidity, reliance on debt markets, operating cash flow that cannot currently support CapEx objectives. This has contributed to commentary like the following on major finance shows such as Power Lunch. Quote, I think Michael Burry kind of suddenly made us realize that there are a lot of uncertainties with regards to the future growth rate of these magnificent seven companies that are now competing in this AI race. And in addition, we know that there's a lot of question marks about whether all this capital spending is going to pay off with a decent return. So suddenly, there is a lot of uncertainty about the projections for strong growth in these seven companies, unquote. I am happy to have a serious intellectual discussion on this topic because I believe the AI bears are wrong and ultimately fighting a losing battle. Technology does not remain stagnant, it advances. The Magnificent Seven are arguably the strongest collection of businesses ever created, led by some of the most capable management teams in corporate history. We are not watching one company make an isolated bet on a radical idea that may or may not work. These companies are actively building products and services around AI because AI has already been established as the next frontier of computing. Can we really take the bear case seriously when the executive teams at NVIDIA, Microsoft, Meta, Amazon, Google, Apple, and Tesla have built trillion and multi-trillion dollar businesses that are signaling that we are still early in the AI cycle and that this is the future? I would rather listen to Andy Jassy, Sundar Pichai, Elon Musk, Mark Zuckerberg, Jensen Huang, and Satya Nadella than a cohort of bears on the sidelines who do not work in technology and have no involvement in the direction these companies are taking. Statements like, quote, there are question marks about whether all this capital spending is going to pay off with a decent return, end quote, are frustrating because they often sound like conclusions drawn from market caps and PE ratios rather than from earnings calls, quarterly filings, and the operating results that have been unfolding for years. The statement is simply not supported by what we are watching in real time. We have also seen what happens when CapEx is not treated as a priority. Here are the facts. So I'm going to stop for a moment. What does everybody think so far? So this is the post that I am going to be putting out live on X about the AI bears. The next part, I'm going to skip a little because it's all numbers that everybody has heard me cite repeatedly. I go into the CapEx allocations and the debt loads and all the revenue and operating cash expansion from Apple, Microsoft, Meta, Alphabet, and Amazon. So I'm going to skip a bunch of paragraphs and I'm going to continue. For anyone to say that there are question marks about whether this level of capital spending will produce a decent return is to ignore what has been happening quarter by quarter. Apple's CapEx consistently increased moderately versus peers, while cloud and platform peers dramatically increased infrastructure investment and saw corresponding growth in revenue and operating cash flow. I believe the bears finally got what they wanted with Oracle's earnings because Oracle has become a convenient scapegoat for the broader AI bear case. Oracle has $19.77 billion in cash and short-term investments and $0 in long-term investments. Long-term debt now stands at $99.98 billion, putting net liquidity at negative $80 billion. Oracle also generated $22 billion in operating cash flow over the TTM, while allocating $35.5 billion toward CapEx, resulting in free cash flow of negative $13 billion. Bears finally have a metric they can latch onto, but Oracle is one company, and its balance sheet structure does not define the rest of the AI ecosystem. Bears should also keep in mind that debt funding is not automatically a problem. Mismatch is. If Oracle's RPO converts to revenue and margins hold, the funding mix could prove highly profitable. It is premature to treat Oracle as the definitive poster child for the AI bear thesis. Now compare Oracle's position to the hyperscalers. And I go into all the numbers for Oracle versus the hyperscalers with cash on hand, free cash flow, et cetera, et cetera. So then I go into, I also believe many bears have not been reading the earnings calls. If they had, they would see the AI narrative remains firmly intact. Don't worry, I'll do the work for them. And then I go through the earnings calls and I cite that Microsoft guided to increase total AI capacity by 80% plus this year and to roughly double total data center footprint over the next 2 years. How they highlighted new flagship AI data centers expected to scale 2 gigawatts and go online next year, deploying NVIDIA GB300s and improving token throughput for GPT 4.1 and GPT-5 by 30% per GPU. And then that Azure AI factory scale of 80,000 customers and commercial RPO increased 50% to nearly 400 billion with a 2-year weighted average duration. And I go through all the same stuff for Alphabet and Amazon and Meta and Oracle. And then, man, I wrote a lot of stuff. I don't even know if the Bears are going to read this. They're freaking Bears. At the end of the day, the AI bear case increasingly depends on taking a company-specific funding decision and projecting it onto an entire technology cycle that is being funded very differently by the companies actually leading it. Oracle may have chosen a more aggressive balance sheet path to accelerate capacity, which creates real execution and timing risk, but it does not invalidate the broader thesis. The hyperscalers and platform leaders are not hoping AI works, as they are actively monetizing it today. We are witnessing the hyperscalers expand backlog and remaining performance obligations and converting infrastructure investment into revenue growth and operating cash flow in real time. If someone wants to debate valuation, competitive dynamics, or the pace of demand, I'm all for it. But the lazy narrative that CapEx won't earn a decent return ignores what we have already witnessed since 2021. These companies investing most aggressively are the same companies expanding revenue, widening cash generation, and strengthening strategic moats. Oracle is not proof that AI is a bubble. At most, Oracle is proof that funding choices matter and that execution matters. Meanwhile, the builders are telling you quarter after quarter that demand is still ramping, capacity is still constrained, and the opportunity set is still early. So, yes, thank you, AI bears, for the cheaper prices and the recycled fear narrative. I'll keep reading the filings, listening to the calls, and following the cash because when this cycle is judged in hindsight, it won't be decided by who posted the best skepticism on TV. It'll be decided by who built the infrastructure, captured workloads, and compounded cash flows over the next decade. The reality is that the AI bears just made a great company such as NVIDIA, or just made great companies such as NVIDIA, Microsoft, Apple, Meta, Amazon, and Google cheaper on a forward basis. Below is a table I constructed on the current fiscal year and next 2 fiscal years. And then I go into all the valuations, et cetera, et cetera. And then the closing paragraph is there are always pockets of the market that are expensive, but it's not lurking within the financials of NVIDIA, Meta, Amazon, Microsoft, Apple, and Google. If we experience a continued drawdown, these companies will get even cheaper on a forward basis. So thank you, AI bears, for allowing me to pick up more shares of companies I was planning on adding to anyway at lower forward valuations. In the short term, your help is always appreciated. And in the long term, I believe you're likely to miss out on a tremendous amount of appreciation. So we'll see what happens. I mean, I'm gonna hit post pretty soon. Let me get a different tab up. I want to put a what do you call it? I want to put a poll up and see what everybody thinks. All right, poll. Do you like the post? So we'll see what happens after I post this and people go crazy again. So the post is the one that I just read to everybody. Man, I got to tell you, you guys are hilarious. Absolutely hilarious. Thank you, Lisa, for becoming a member. Really appreciate it. Thank you, BSMT, for gifting 5 memberships. Really appreciate it. Can't thank everybody enough. Thank you, Dan and Wade, for becoming a YouTube member. Really appreciate all the support, everybody. Yeah, I mean, listen, it's long. They're lucky I didn't do 4,000 words. How about that? If people don't want to read it, they don't have to read it. I'm not too worried about that. Reading is hard. Are you guys serious? Come on now. These guys are crazy. Look, I disagree with the Bears. I disagree with them. Full stop. I mean, and I'll show everybody the charts why, and we'll go from there. All right, we're going to hit send. Incoming. Incoming. Okay. It is now live. How do I pin this? Pin to my profile. All right, everybody. The post is live. Here is the post on X. Post is live. Well, we'll see what happens by the end of the stream. We will see what happens. Looks like the overwhelming response from the poll was yes. Send the text out real quick. See what happens. How are their comments already? Like, there's no way people read this. How are their comments? Seriously? At Grok, summarize this in 2 sentences. Man, you guys weren't kidding. People don't like to read, do you? Jeez. Jeez. All right, so I'm not going to waste everybody's time with all the CapEx stuff that you've heard me discuss, but there is one area that I did update that I want to show everybody because it's pretty important. And I'm really getting to the point where these companies really should all report on a calendar year, and we should, I guess I closed it, so I got to reopen it, but they should report in the same time span. It's getting really annoying. So, because we know that the Bears are going to look for any little thing, I don't want them being able to say, where the hell did it go? I don't want them to be able to say and nitpick that the years are off. And just in case Tevis is watching, which I know he's not, we will make this easier on the eyes for everybody. Now, NVIDIA and Walmart report on a January end date. So they are January to December. Microsoft reports June. Costco reports August. Apple reports September. And then Meta, Amazon, and Alphabet report on a regular calendar year. So if we look at the current fiscal year EPS numbers, okay, and then go out 2 years, whether it's a January, June, August, or September 28, or a regular 2027 calendar year, this is column F 2 years in advance. Now, on the current fiscal year, I love the fact that Walmart and NVIDIA both report on a January set because it shows us Walmart is trading at 44.2 times current year earnings, where NVIDIA is trading at 37.32 times. And with the expected EPS growth of both companies over the same time frame to January 2028, one of them has 105% growth in EPS, the other has 26%, rounding up. Walmart trades at 35.15 times, NVIDIA trades at 18.21 times. It is insane at how disrespected NVIDIA is being. And then if we look at Microsoft on the same light on a June basis, okay, it's trading at under 30 times this year's earnings and 21.2 times June 28 earnings with 40% EPS growth. Costco on an August reporting schedule is trading at 44 times this year's earnings, 36.29 times 2028 earnings with 21% growth. I mean, I got to tell you, this is crazy. So I redid this for everybody, and we'll see what happens. See how the bears respond. Costco, you're right, it's a steal. I love Costco. And this particular worksheet, I am cleaning up tomorrow. It is in one of the posts on the members only. The members only is just if you want to support me. I have spreadsheets up there, and there's a private video that we do Friday nights that I think last night went for about an hour and 20 minutes with Tanner and Tevis. But you're not missing much if you don't sign up. You get everything on the regular videos. But when I look at this, everyone, I don't see that we're in an AI bubble. I'm excited about the future. While I think it's crazy that the market sold off after Powell turned dovish and we got a lot of good data out of the Fed, these numbers indicate to me that things are looking good. And I'm excited to add to a bunch of these companies over the next couple of weeks. Now, here's what I'm going to say about next year. I am looking at next year as we can absolutely retrace. And I do not have crystal ball. I do not know what is going to happen. Okay. But every gap gets filled. Every decline reverses. Some are more drastic than others. Some are more drawn out than others. But we got through COVID. We got through high inflation. We got through the financial crisis. We get through everything. I'm not seeing anything on the horizon unless an unforeseen event happens that is out of the blue that nobody is handicapping for. And those events could be a new war breaks out somewhere, China invades Taiwan, things that are low probability in the current environment. I don't think energy prices is going to get ahead of themselves. I don't think energy prices are going to go up to 70 or 80 a barrel and cause inflation to go up. So I think that's off the table. The Fed is likely going to have a new dot plot come out at some point middle of next year after we get a new Fed chair. And while the current dot plot was not updated, I do think that rates are going to go down more than what the Fed is calling for. China is a risk. I'm not saying it's not, but I don't think it's a black swan event. Now, looking at the Fed's economic projections, they're seeing unemployment plateau and then start declining. They're seeing inflation, headline and core, both getting back to 2.1% over the next several years. And we're in an environment where if that happens, the housing market should become unlocked. So can the market go down next year? Absolutely, the market can go down next year. Do I think that it's not going to appreciate? No, I think it's going to do well. Now, Tom Lee came out. People were going crazy because he was saying that he's expecting 20% decline and then a 40% rebound next year, and ultimately the S&P will be at 7,700. At this point in time, this is what I'm going to say. And this is subject to change. I'm going to make my final prediction, just like I did last year, on New Year's Eve. And at this point, I think we have a real shot at S&P 8,000 next year. I would say the only ways that this is getting revised is plus or minus 200 points. I don't see anything that's going to make me think we're only going to be at 7,200 next year or 7,300. Now, keep in mind, this is with no black swan event happening. Obviously, if a black swan event happens, all bets are off the table. It is a midterm election year. I think that the administration is going to do everything they can to prop the market up, because the last thing they want to do is have a lame duck president that can't get anything done in the last 2 years. I feel very good about the market. I also feel good about the bottom 493 companies. I think we're going to see a lot of these companies expand their productivity. I think they're going to expand margins. And I think they're going to be in a position where, as rates come down, they'll be able to refi debt or issue new debt, pay down higher yielding debt, and expand margins. So I think we're going to be all right. We'll see. I also think that one thing that we haven't talked about in a while is the amount of cash sitting in money markets. So let me bring that up. And this is a crazy number. I think it came down just a little. So there's still $7.48 trillion sitting in money market accounts. This does not include CDs. This does not include bonds. Is this money really going to sit on the sidelines when the Fed effective rate is falling under 3%? I don't think so. I'm not saying all of it's come back in, that's not realistic, okay? But I do think there's a good chance we can get back down to 5 to 6 trillion sitting in money markets and have 1 to 2 trillion come back into the capital markets, because people are going to likely want to recreate that T-bill and chill methodology when rates were at 5%, 5.5%. When money markets are down at 3% and under 3%, I don't think people are going to care about them nearly as much as they do now. And that capital could find itself into dividend aristocrats, dividend kings, companies that continue to increase dividends, ETFs and closed-end funds that generate income. So I think it's going to be pretty interesting what happens next year. Oh, I see a lot of you are saying the Rocket Lab launch. I don't even know if I'm allowed to stream it, so I will not be watching it. But there were a few things I wanted to discuss also that are new. So just give me a moment. Let me queue up the videos to talk about. But before we do, I want to see what does everybody in the chat think? And thank you very much, Rodin, Nadi, Viper tarts. Hell yeah, Milkman, especially the power lunch commentary, keep charging. I mean, they said it. I'm going to quote it. They said it. It's fair game, right? They can clip me and quote me. It's fair game. I think all midterm election years are down years because that is a fact, not a feeling. Yeah, I get it. Midterm election years traditionally have not been great, but I do think that administration is going to do a lot, and I think we have a great setup. Look, this is a hated rally, and I just don't see anything politically aside in the economy. I think that we're in a good place. Rob, what do you mean by people doing weird stuff with their money? Can you give me examples? And I do think Tom Lee is talking the way he is because of how crypto has played out and how bullish he was. Yeah, and let's keep in mind, we got like 6 weeks until earnings. And what are the bears going to do and what is the market going to do when NVIDIA puts up 65 billion plus in revenue? I mean, what are they going to do? You can't hide from that. And what if Jensen comes out and says in Q1 he's going to do 70 billion because China orders are coming in? NVIDIA is so interesting to me. I really think that is one of the best valuations we have seen in a long time. Yeah, I agree, John. The next NVIDIA report is going to be insane. I am glad that I was buying it during the downturn. I'm glad I was buying it during DeepSeek. I'm glad I was buying it during Liberation Day. I'm just not seeing anything that is making me afraid of NVIDIA at all. Yeah, Laura, I agree with you. There could be a point where everybody just realizes don't fight NVIDIA and they just plow into it and drive it higher. I could absolutely see that happening. I'm with you on that. Yeah, but look, PB, Broadcom's valuation got ahead of itself. It's a great company, and I think it's going to do really well in the future. But sometimes companies get ahead of themselves. This is what I can tell you. Look, I haven't been buying SoFi at these levels. I know other people have, but I also have a big position in SoFi that I established at lower prices. I'm not actively looking to add more. I think SoFi is going to have a great year next year. This is what I'll tell you. I can't wait for Q4 earnings, but I'm even more pumped for Q1 because I think they have a real shot at becoming the AWS of fintech. As rates go down, I think it is going to be super bullish for SoFi because they're in a position where their net interest margin, the NIM, should expand. Because remember, they're taking in deposits. They're paying out interest on those deposits to lend out that capital. They've lent a tremendous amount of capital out in a high rate environment that they're collecting the interest on. Now, those deposits are not bonds. They're not CDs where the coupon or interest rate is locked. It's a savings account, high yield. It's going to decline as the Fed takes rates lower. So what does that mean? That means that SoFi will have already established those loans, they're getting paid that locked in interest, but the capital they're paying out on deposits is going to decrease. So their margins are going to expand, and it should make banking profitability go gangbusters. And good thing about this upcoming year, Noto's got PSUs at 35 and 45 that he still hasn't hit, and they have to be there for an average of 90 days for him to get the tranche. I think there's a good chance we hit 35 tranche. I don't know about 45, but we'll see. Going to get milk. I love it. Yeah, that's a good point. Look, if SoFi doesn't do an acquisition, they've raised so much capital that they can lend out a tremendous amount while rolling out more products. And I think everybody knows my position that I want business banking and I want wealth management sooner than later. So let's see when those come out. I've been very big on that. I've been very vocal on my articles on Seeking Alpha and on the FinTech Friday podcast. Hopefully we get it. I mean, look, you got Liz Strat, who should head up wealth management. You can take custody of 401k funds and throw proprietary SoFi ETFs and mutual funds right in it and collect 2 sets of management fees. I think it'll be really good. I'm with you on QXO. That is my dark horse that really not a lot of people know about except for the community because we've been talking about it. I think Brad Jacobs is a superstar, and I think he's going to do really well with it. Yeah, listen, I'm not saying AMD is not going to do well. I'm just not an AMD person for obvious reasons. Sorry, I don't post anything anywhere other than X, YouTube, or Seeking Alpha. I'm not opening up a new account. I'm just not doing it. Plus, everybody that I interact with is on X for the most part in YouTube. I'm not opening up new accounts anywhere. No, I think AMD is a great company. It's just I have a love-hate relationship with them. That's all. Carl, you're hilarious. CoreWeave and Nebius, I still need to do more work on it. I do want a position in the neo clouds. I'm just not sold on them the way everybody else is. And I think there's very easy alpha to be made on NVIDIA, in my opinion. Now, I could be wrong, but oh man, you really want me to go down a Palantir hole right now? I mean, I think the valuation on Palantir is insane right now. Do I think they get to $1 trillion? Yes. Do I think it's in 2 years like Dan Ives? No. Tim Seymour, who I would love to see more of on CNBC, said yesterday investors should not run out the door on AI stocks yet. I have not seen this. I want to watch it with everybody. Let's see what he said, and we'll keep the conversation going.
Contributor. Hey, Kelly. So thank goodness AI came along when it did, because the market in 2022 didn't look so hot. Thank goodness the rest of the market is now feeling better as the AI trade stumbles. Can it be that easy?
Well, I think the other 493 are not only reaping some of the benefits of AI, but I think you have a dynamic here where you definitely are seeing EPS growth. You are seeing margin accretion as opposed to what we're all debating today, at least about Broadcom margin degradation. So the dynamic of rotation is great. I think it always is relative to where you're coming from. I think these are markets that are heavily overweight, at least a lot of large institutional and retail investors into AI and some parts of the tech trade. I think today's price action also is a function this is almost a 20% move in the semiconductors, the stocks, the SMH, whatever you're following from that intraday bounce back 3 weeks ago. This is a massive move, and we're at all-time highs. And so today feels kind of painful. And two leaders in Oracle and Broadcom have told you messages that are a little concerning. I don't think people should be running out the door here. I do think, talking about international, talking about some of the trends, that it is about evaluation, confidence that valuations are not extreme, confidence that you see EPS growth, confidence that the global dynamics in the economy that we at least know right now says the dollar could be a little weaker. Other central banks, if anything, might be leaning into not only on pause, but maybe hiking a little bit. That global growth is okay.
Yeah.
And that's a decent setup for the other 493 and international.
So you stick with it. You love the rotation. You lean into it.
You lean into it because I also think that healthcare was overdone to the downside. I love banks here. I love the cyclicality that is there, as long as, the Fed told us this week, and that's part of the reason also why I think the markets are pulling back a little bit. You got two Fed presidents weighing in today, trying to tamp down some of that dovishness. But,
I see.
But I think banks, cyclicality, healthcare, industrials, GM, airlines, these are places where the valuations are good and the story's good and the earnings profile is very good.
What if people start to really panic or jump out of the AI trade? Or is it possible they're just taking profits on what has frankly been a very good year?
I'm hearing from investors, there are people that are nervous, but I would just go back to where are we coming from? We've had a massive move and we've rallied substantially. Jumping out of windows, I think the dynamic here is that there's a lot of money that's been pushed into the trade that's somewhere out 3 years. What we've heard over the last couple of days is we don't really know what the margin profile is going to be. We don't really know if some of these customers, Jay talked about the debt profile. That's thrown a different light on even, hyperscalers, the Mag 7s that at least have suddenly been, they were free cash flow machines, but suddenly they may not be. That means these things might trade at a different multiple. But I think if you're running too far away from Google and Meta, I think even NVIDIA, I understand that that's the more central part of, are their margins going lower? And if they are, then this stock might not be as cheap as it seems, because right now in valuation, it's not
24
Broadcom.
times, right?
Yeah.
I'm a little shocked. I think I'm a little shocked at the moment. I normally agree with what Tim Seymour says. I definitely don't agree with that. I don't agree with the last take of it. I do think the bottom 493 are going to do well next year because I think there's a lot of room for them to make up ground. And I think operationally they can do well. They'll utilize robotics and AI to improve operations and cut costs. But in order for them to do that, they're going to have to buy stuff from the largest 6 companies. So I'm not seeing it. Maybe I am too bullish on the Mag 7. I think they just get bigger. I don't see a world where companies are getting rid of Azure, SharePoint, M365 licenses, storage space. It's just not happening, in my opinion. We'll see. I don't know about Tesla. Look, Tesla is an amazing visionary company. When they're able to monetize everything is a different story. If I had to put a bet down on what company is going to be the largest company in the next 15 years, Tesla is right up there, because I am one of those people that believes Optimus is going to be the biggest product we've ever seen. It's just about execution with them. So we'll see. I don't like Tesla at the valuation here, but long term, I think they have so much firepower that, Optimus really has the ability to be the largest product. And how can you go against Tesla? How can you go against Musk? I don't see it. I think in the short term, I'm absolutely getting an Optimus. Absolutely. Look, there's no reason not to, okay? Think about it. I am getting an Optimus for my parents. Likely they will buy one for themselves, but if they don't, I will get them one, because the reality is I don't want my parents going up and down the stairs. I don't want them having to lift laundry. I don't want them having to do things. They're getting older. So I think the Optimus platform has so much utility for so many things that people are overlooking. And at a $22,000 price point, when you can finance it over 5 years, it's cheaper than getting a lower end car. So why do we think that this is going to be some item that people don't buy when not only is it going to give you back your time, but for elderly people, it's going to be a huge personal assistant. Think about having to lift a case of water, like stupid things that we take for granted, going up and down stairs. So yes, I do think a lot of people are going to buy Optimus. And I do think that it's not just going to be a one-time revenue thing. It's going to be a monthly package for it to be hooked up to a neural network and continuously learn. So I do think it's going to be great. I just, right now in the short term, I'm scared of the valuation. I mean, there will be a moat if they're first to market and can significantly out-manufacture everyone else. Keep in mind, and here's where I give the nod to Elon in this magnitude, okay? He went to war with Ford and GM and Stellantis and every other car manufacturer. Nobody thought he would be able to do what he did. Not only did he not make a car with a combustion engine, he did electric. And he actually succeeded. And he scaled manufacturing plants. Why are we going to think that he is not going to do the same thing with robots and be the #1 manufacturer of robots? I'm not seeing it. I think he's going to win at it. And what about when robots start making robots? I mean, the reality of it is they're going to be able to do so many things for us. You think about just normal things of owning a home: cutting the grass, doing the dishes, cleaning, laundry, just those 4 things. And then if you live in the Northeast or you live in the Midwest, shoveling the driveway, shoveling the sidewalks. I mean, why wouldn't you want Optimus? I mean, I would want one. That's just me. You could save yourself the money and buy a Google Home speaker and attach it to a RoboVac and call it a day. Yeah, but that RoboVac isn't going to freaking cut the grass and clean the house and freaking fold the laundry. So, I don't know. We'll see. Thank you, PB, so much. Was Code Red a warning sign on the mid-show yesterday? No, it was not a warning sign. Why? Why would you think that that's a warning sign? Why? Because of his assistant? I had no idea. What do I think of Amit's manager? I mean, I've never met her, so I can't tell you what I think. I can tell you that when I spoke to Amit and we talked about it, he is very excited about the opportunities for his channel. And if she can deliver on his vision, I am going to be super happy for him because, look, I would love nothing more than for Amit to be able to interview Elon, be able to interview Jensen, and potentially get himself on some really big shows. So if she's able to help him scale this and get this to a point where he's in that position, That's what I want to say. So I'm supporting it. I really hope that, this is going to be something where a lot of good things happen. So let's see. Let's see where it is in a year from now. Yeah, look, Amit has worked super hard. He's built a brand and he's in a position to hire people, which is great because he's helping the economy and he's growing the platform. So, got to support him. I think that this is going to be great. And look, he does not have the time to do everything to run this brand. He just doesn't. He needs help. And hopefully she's the right fit. And we'll see. I mean, from the private conversations we've had, I know that he's really happy. And I know that her work ethic seems to be amazing. And I think that this is going to be, I think we're going to see a lot of changes. And I think we're going to see a lot of good things over the next 6 months. So, really happy for him. Data centers. I mean, we just spent the first God knows how long talking about data centers. I'm bullish data centers. So, Matt, I am happy for you. If the launch is over, you're welcome to come back and hang out. Hold on. We're always happy for Matty Money. Yeah, I heard the mods were working hard. Oh, God. PB, thank you so much for another super chat. What movie is the one to watch tonight? Wow. All right, PB, what genre do you want? I'll give you a movie pick, but what genre? Don't make me pick blind. Rambler, we'll talk about some Pokemon stuff in a little bit. Let's see. Can we chill on Matt's private island? I mean, I haven't even gotten the invite yet. Action movie, PB? Oh, man. I mean, what is even considered action these days? I mean, I'm going to throw out a classic. I mean, have you seen Heat or The Town? Because if you haven't, go watch one of those. Comedy. Oh, I just watched Tag not too long ago, and my phone just told me it's a bedtime reminder. Hilarious. I just watched Tag not too long ago. Man, Tag was funny. Big Short's great. A Christmas movie, Lethal Weapon 1. Greatest Christmas movie there is. No, I'm a Lethal Weapon 1 over Die Hard for Christmas movie. Love GoldenEye, second best James Bond movie there is. All right, Shells, you said James Bond. What's the best James Bond movie? Training Day is legit. I like that pick. Thank you, C-Man. Have you ever seen 50s movies Patterns? I have not. Should I watch it? Yeah, Lethal Weapon 1's freaking great. I mean, I'm with you. I'm a Casino Royale guy and then GoldenEye. Those are my 1 and 2 for Bond. When am I buying CoreWeave and Nebby? I think within the next month or so, I will start a position. What the hell is going on? Why is my phone freaking... What the fuck? My phone just started, and I didn't touch my phone. My phone's on my desk. I did not touch it. It just started recording myself to send a text message. Like, what the hell? Apple, do better. Apple, do better. And how excited are we for UFC to come to Paramount next month? I'm ready. Raven, I consider Heat to be a masterpiece. Heat is an absolute masterpiece. Full stop. The CIA knows who my milk dealer is. It's Ronnie Brook Farms. Everybody knows that. Thoughts on Blow? I mean, the movie's amazing. Johnny Depp was incredible. And there are some people asking about QXO. So, Maddie, look at your WhatsApp. Come on down. Let's talk some movies and stuff. So people were asking me about QXO, and I think it's going to really do well next year, especially in a lower rate environment. They are looking to redefine the building supply segment. And I do think a lot of projects have been put on hold. They acquired Beacon Roofing. They're looking to acquire a lot of other companies. Supposedly, they are going on Palantir's system. And I think they're going to streamline everything. What I find very interesting is the median age of a home is 44 years from the research I did. And I think that we're in a situation where a lot of people have foregone putting new roofs on, doing big projects, but in a lower rate environment, they will be more likely to do these projects. And that should be bullish for QXO. And I think that they're going to do very well next year. I think it's a segment that is not being looked at. I think Brad Jacobs is going to surprise a lot of people. So, thoughts on NVIDIA hitting 130 end of year? I certainly hope not, but if it does, I would be buying more myself. So, have I seen Tanner's dive into Axon? I have not, but, okay. I owned Axon at like $15 and sold it at 25, like an idiot, looking back on things. Chels, I must know, which do you think has a better valuation, Palantir or NVIDIA? Let's pretend you didn't ask that. You know the answer. You know the answer. I mean, the better valuation is NVIDIA. I think Palantir is a great company, and I think they're going to do very well in the future. I think the valuation's horrible. PB, thank you again. Do a deep dive on RDW or Copen. Copen keeps coming up by a lot of people. I don't even know what RDW is. What the hell is that? Hold on. RDW. Redwire Corporation. This sounds familiar. I'll take a look at it at some point. And I got to tell you, thank you, Tanner, and thank you, Tevis, for making me go dark mode on everything on my computer. It is saving my eyes a little bit. I think NVIDIA does better than AMD and Intel. I watched Camillo pitch Bloom on Graham Stephan for a little bit. Silly enough, I was looking at it $8 with an engineer, and he didn't think it was interesting. So, Matty Money, Rocket Money had a successful launch tonight. Space economy is going to go boom. You watch. Matty tried getting me to invest in freaking Rocket Money, and I didn't. Should have. Didn't listen. I'm stubborn. The real question is, am I going to be stubborn on VG? I don't think I'm going to. I have a feeling I'm going to become a shareholder of VG in the next week or two. So maybe we'll have a VG party, everyone. I still think BMNR is fine. I think BMNR is fine. I'm not worried about Ethereum. Data centers in space. I think we're a while off on that. I'd like to see it happen, but I think we're a little off on that. Online fitness coach. Steve, how many times have you said I should have listened only to not invest in Hood and SoFi? I actually have a very big position in SoFi. So I missed Hood. I didn't listen on Hood, but if you go to my history about SoFi publicly, I'll bring it up. You can consider me Captain SoFi at this point. I'm going to show the receipts. Since August of 2021, I have been writing bullish articles about SoFi. So I was through the thick of it when it got down to $5. Very bullish. I have to look into the lawsuits. I know nothing about them. That's why I still have to do more due diligence on VJ. But everything I've seen, I like. More due diligence tomorrow. Yep, Raven, I listened about dark mode. We're going dark mode. Congratulations, Gary. SoFi at 11, Hood at 31. You're doing great. Love hearing that. I love hearing success stories. Unlike the Bears, who just want things to go down, I just want everybody to do well. Man, Micron's a great company, everybody. I love Micron. I put them in my stock draft. I don't know as much about Next. Bears should be hibernating. They shouldn't even be awake. They should be hibernating. Don't wait for my blessing. I don't know what the hell I'm talking about. I know nothing about Zeta. What am I eyeing? Look, other than the obvious things, okay? I just started a position in Chevron. I really like Chevron a lot. There's a lot of reasons for me to like Chevron, especially the buybacks, the growing dividend of 38 or 39 years, the 4.6% yield. I like Chevron a lot. I think we need more energy, and I think Chevron's going to do well. I mean, the only stock that people are really not aware of that I really like is QXO. Other than that, I just think that the theme that got us here is going to get us higher. I recently became a shareholder of Microsoft. I like Microsoft, but look, I'm not taking big swings at this point. When does the YouTube dividend portfolio series start? Most likely first week of January. And I think what I'm going to do, I don't know how I'm going to do it. The same way that I do my dividend harvesting portfolio, maybe I'll just start a new account, throw a little bit of money in there, start off and add to it every week, and we'll do a weekly dividend corner. And I'll just add $100 a week or something to it, and we'll just see what I buy. I'll give a little synopsis about why I bought it and see how it does. I mean, I was thinking about doing that, and I was thinking about doing a portfolio about beating the S&P. So we'll see. I do want to do some public portfolios. I'm not going to look. The one thing I'm not going to do, I'm not going to go put a ridiculous amount of money in them and show it. I am going to just do it very slow from the ground up and allocate every week to it. So don't expect eye-popping numbers. Okay. So PC gaming, I never talk about position sizes. The only thing I talk about is percentages if I can actually figure them out. I don't talk about dollar amounts. I'm not looking for clickbait, not looking to give anybody sound bites or anything. The factor that got me into SoFi so early was Anthony Noto himself. So there is a speech from Stanford University with Anthony Noto, and if you listen to him, it will make you want to invest in anything he's involved with. So that's what got me in it. Yeah, like I said, I don't know anything about the lawsuit, so I can't comment. Defense sector stocks. I mean, I own Coca-Cola. I was looking at Pepsi. I don't know if you mean that or like Lockheed Martin, Raytheon, or stuff like that. I'm not sure exactly what you mean. I'm not sure about Broadcom. Maybe it can continue falling. Long term, I think it'll be fine. Chevron's a long term hold for me. Yeah, first thing I purchased was a mutual fund. Yeah, Mercado Libre. Tanner's tried to get me to buy that for so long. AMD is a great company. I don't know what you want me to say. It's a great company. I am not a CIA spy. I own some foreign stocks, not many. I don't own any AMD. I owned a lot of AMD and I sold it at $3.68. I'm pretty diversified. Like when everybody freaks out about the markets, I don't freak out. I'm pretty diversified. I think everybody knows that I really believe in the S&P 500. I have 100% of my retirement in the S&P 500. So I don't freak out about things. I may consolidate a little bit. There's a couple of ETFs I've considered getting out of and consolidating into some other things. But at the same time, I don't know. VOO over SPY unless you're selling options. I mean, look, if we look at SPY versus VOO, here's exactly why. First off, SPY has a 1.06% percentage expense ratio. Okay. I'm sorry, that's a dividend yield. 0.09 expense ratio. VOO, 0.03. So right off the bat, if you have a large amount of money in the S&P, you're automatically paying less in fees, which is great. And then if we actually look at an advanced chart and we put SPY and VOO against each other, I know before when I looked at VOO did better over the long term. Hold on. I apologize. Screw that up, didn't I? Hold on. Advanced chart. Okay. I don't like how you can't see the other one. Hold on. I'm going to have to do it on another software or something, but over a 5-year period, SPY is just under VOO. SPY is in green. It's just under it. They do basically the same, but you get an extra percentage point or so out of VOO, and you pay a less expense ratio. So I like VOO better. And that doesn't even count. So I'm sure there's something else they could show us, but VOO over SPY. SPLG, I love SPLG. I like SPYG also. Boom, PB, you're speaking my language. Listen, I'm happy that it sold off on Friday because guess what? Just like you and a lot of other people, my contribution is going to buy a little bit more. I like it. And I say this all the time. This is something that helps backstop the market because pension funds are a thing of the past. People continuously put into retirement accounts. They're allocated to total market and S&P 500 index funds and total market funds. Yeah, SPMO is interesting, without a question. I mean, I like SPMO. It's the momentum one. I really like it. VGT. That's the Vanguard technology. I mean, it's not the same. It's a good fund, but it's not the same. I need plants in my office. Why? Then it's something out of water. Oh, if the Yankees don't retain Bellinger, I'm going to be pissed. How do I feel about granny shots? I don't know. I'd rather be an SPYG, I guess. Look, if Christmas, Chel's put something right, or June put freaking Christmas decorations. If QXO shoots up to 30 quickly, I don't know. I'm not a big flopper. It's something I want to hold for a while, so I don't know if I trim. I'm sorry. No Christmas tree. It's too much work. Putting up a tree, taking it down. It's too much work. Dodgers three-peat. Listen. I could see the Dodgers three-peating. Believe it or not, I really don't follow a lot of people on Seeking Alpha. I really don't have time to read a lot of stuff. I really just follow Brad Jacobs for REITs. That's about it these days. Matt, why don't you come on and let's talk about your idea? Come on. We need the spirit. There's no decorations going up in my office. There's no tree going up. I'm sorry. I'm just not into it. Oh, Maddie, you got Chinese? I love it. Good for you. Good stuff. No, it's not Scrooge Fiorillo. I love buying presents for people. I just don't want to put things up and take the time to take them down. You know what I mean? I try to be very efficient in everything I do. You're right. You can never go wrong with Chinese. I'm with you. I've never listened to the Steve Eisman show. Oh, that's an easy one. Italian food. All day, every day. I don't know why you guys think I'm a CIA spy. Like, that's crazy talk. All right, this is interesting. So they're saying that there could be much more upside to Broadcom's AI backlog. Interesting. How am I sus? What are you talking about? Have I seen Burry's arguments? Yeah, I've seen it. And obviously, I'm on the other side of it. Oh, Japanese over Chinese food. I don't know about that one. I don't know about that one. I don't understand Lululemon. I'll tell you that right now. Getting in the clothing business, I don't understand it. There's so many little niche companies. It's not something I would feel good owning. Yes, silver pumped hard. Gold and silver was a great play for everybody who got in it. I'm holding XRP indefinitely. I don't care about being up. I'm in at like 19 cents. It's either getting to a certain number or it's not. So you guys are right. There's a lot of people pumping Broadcom. A lot of them. Check this out. Hold on.
Analyst Vijay Rakesh, he has a buy rating on Broadcom, maintains it post earnings, raising his price target from 435 to 450. So what was the problem here with what was said on the call, do you think, Vijay?
Yeah, thanks for having me on, Sarah. So for Broadcom, really, the focus was on their backlog being a little bit, not as high as people were expecting, but also some of the Anthropic orders on the rack side were carrying lower margins. And so that was really what brought the stock down a little bit. But that said, this is a stock that's growing their AI revenues 125% into next year, calendar 26. And they are also growing earnings 45% plus year on year. So this is still where the growth is. They are still the big suppliers to Google on their entire hardware stack, to Meta, to Anthropic, and even OpenAI coming down the road. So,
why was that a surprise on the margins being lower because the AI mix is growing if they're seeing such tremendous revenue growth?
That definitely should not have been a surprise. I don't think it was a surprise to any of the investors who are actually looking at it. But I think, broadly, if you look at the names, this stock is up 75-80% year to date. You're seeing a little bit of a pullback. We would actually buyers on this pullback, as I think all roadmaps on the AI side lead to ASICs as well. Every major CSP and hyperscaler is adding ASICs.
For as much as Broadcom went down, when you look at the chart like that, it's not even scary.
To their roadmap. So shouldn't be a surprise. We would use the pullback. So.
Yeah, we should point out this is the worst day for Broadcom going back to April, but it does have that feel, BJ, of maybe locking in some gains for this amazing year.
Absolutely. I think that might be a little bit of it, but we are not done yet. I think, as we say, Broadcom's AI revenues this year is growing 50% year on year. 2026 is growing 125%. So it's actually accelerating in their AI revenues. And fiscal 27, as Hawk said on the call, will be a bigger year than fiscal 26 in terms of growth or total AI revenues. So there's more to come. And OpenAI is not even in the backlog yet. So the whole OpenAI engagement is still down the road. And so we would really, block out all the noise, use the pullback, buy it. It's still a great name. So.
When on a week where Oracle talked about sort of this idea of being chip neutral or chip agnostic or bring your own chip, however you want to phrase it, do you think most chip investors want to own both Broadcom and NVIDIA, or are they willing to trade it from one into the other?
I do think that you will see investors own both because they are both the best of breed in what they do. If you look at NVIDIA, they obviously are the king of the hill. I mean, they have almost, they'll be doing on 200 billion, 260 billion in AI revenues next year. And they're trading at a substantial 20 times next year PE versus their top line growing 50% year on year. So big discount to what they're growing. So that's definitely where, investors have to be adding. Broadcom as well is definitely growing a whole lot faster. That's reflected in the valuation. But again, these are two great names that investors should have as you look out next year. Yeah.
All right. I don't know. I'm still not on the Broadcom train right now, but which does make sense. I'm looking at some of these comments. Spencer, if you're in the chat, you're hilarious. At Grok, can you make this into a picture book so I can focus on what he's saying, please? I mean, you guys are hilarious. And freaking Dougie, at Bill Ackman, you have been challenged to a word count challenge. Jesus. You guys are hilarious. Absolutely hilarious. A lot of comments on this. We'll see it. I'm sure tomorrow morning it's going to be even worse. So, thanks, Spencer. That made me laugh. Picture book. Okay. Maybe we can get Gemini to make you a picture book. No, I have not connected with Jason yet. I need to connect with Jason. So that's a upcoming thing to do. I don't really follow the drone market. Spencer, did it make you a picture book? Grading through PSA. Go drop your stuff off at a GameStop or a card shop and let them do it. It is too annoying filling that submissions sheet out on your own and packing it and sending it. Have somebody else do it. I also have a theory that you'll get a better grade if you go through one of them. I'm not on the UNH thing. So don't let strangers handle your cards. If you have a relationship with a shop, or I would make a relationship with a shop and I would have a shop send it out. I don't do anything myself. I have a shop send everything out for me. I don't do that on my own because they send it out in batches of like 200, 300, 400 cards. Telling you, the theory is that because of how much business shops do with PSA, they're likely to get better grades. I think we should have been building nuclear for a long time, and we're in a position we're in because we haven't. So we'll see what happens with SMRs. No, I don't hold any options. I may buy spreads on NVIDIA, but no. Poker game? I don't know. What do you mean by poker game? No, I do not own SMR. Listen, Yang's a smart guy, so Take-Two's interesting. What happens if GTA 6 doesn't freaking come out? Oh, whoa, whoa, whoa. Whoa, 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 whoa. QXO was on CNBC. I'm sorry we're watching this. Calls of the day. Lieros, Boeing, Lockheed Martin, QXO, On Holding, Spotify, and Chevron. Whoa, 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 whoa. Who is on the QXO train? That is the question.
All right, let's talk about some calls. Speaking of upgrades, Citi today has initiated on aerospace and defense. Leidos, buy 218. Weiss, that's you.
Yeah, look, I love this sector. It's a difficult sector.
Chels, are you ready? And everybody that's in QXO, are you ready to find out who is a QXO bull? So I got to think if this is a call, they're not selling it. So let's see.
To invest in, because it's obviously dependent on government contracts. Sometimes companies that are well positioned don't get it. Leidos I like in particular because they really have multiple legs to the stool. It's been a great stock for me, and I have no interest in selling any of it. Management's phenomenal here.
Do you know that the ITA, the Aerospace and Defense ETF, is having its second best year ever? I didn't know that. Boeing, buy 265.
Yeah, 100%. This is not a turnaround story anymore. I mean, this company is doing everything right. New management is on track. I could go through all the orders, but they're not pushing through product. They're making sure the quality and safety is there. And I think that's what was missing for a long time. So the run on this stock is not over.
Okay, Lockheed, neutral, 505.
Neutral's better than sell. It's been a bad year for Lockheed, up about 2%. A lot of things went wrong this year. They lost the F-47 contract to Boeing. Elon Musk punked them around this time 12 months ago. They had a big classified charge. Those things are all in the rearview mirror. And in the meantime, while the F-47 is being built, the F-35, which is Lockheed's baby, is the best jet fighter in the world, and every Air Force wants it. Their missile systems is going great as well. It's an attractive valuation. I think 2026 is the year for Lockheed Martin.
QXO, buy 31 bucks. Loop, Weiss.
Yeah, and the stock, you know, it's look, it's been waiting for another acquisition by Brad Jacobs, and that hasn't happened. But at their earnings and at their recent investor day, he laid out the story, and it's a very compelling story. He is a permanent compounder, not just QXO, not just the other companies like URI. So I continue to like it.
Okay.
I continue to have a good position there.
On holding, top.
Boom. Weiss is a smart guy. He's very level-headed. He doesn't go for things that are overextended. And he said it right. Brad Jacobs is a natural compounder. They're looking for another acquisition. I like it.
Pick 2026 at Steeple, 60 bucks is the target, Jim.
Yeah, I mean, the stock, the company is just doing great. The product is doing great. People want the shoes. The management guidance from the earnings call a few weeks ago was stellar, and I see the stock going higher just with the momentum from that.
Spotify, best idea for 26 at JPM, 805 is the price target, Kevin Simpson.
It seems hard to believe, but if we compare this to Netflix, 805 is a reality. This is a company that's now introducing ad pricing. They're improving their margins. If you look back at the chart over the past year, they had some fits and starts, but I really think that they've dialed it in, and I'm excited about this name for next year.
All right, Chevron target goes to 206, just a couple of bucks, but we talked a lot about these kinds of stocks this week. I think it was Josh Brown who had bought Exxon. Chevron, I said, is the one we're talking about now. Brenda, why don't you take this? This is a 36% upside from current levels.
Right, and the company is talking about growing revenue 2 to 3% in excess of overall oil demand. And also, this company for years was kind of viewed as being the most capital disciplined player in the space, and then they kind of veered away from that. But I think they've come back around now and reined that in a little bit, which is a positive in our view.
Look, I like Chevron a lot for several reasons. They're in a very interesting spot. I mean, you're paying less than 10 times EBITDA and cash flow for Chevron. I really like the valuation, so that's why I just became a shareholder. Spotify is something I missed. I didn't understand how it was going to continue doing what it was doing, and it just kept going. Yeah, there's probably a lot of good finds out there. I'm just not looking to take a lot of big swings at the moment. I'm not, this is not an environment like 2022 and even 2023. I mean, there's a lot of things that moved a lot. We'll see what happens. QS, QuantumScape, something I've looked into several times, but I've never gotten into it. Yeah, Duke is one of the better electric companies. I like Duke. I'm in Southern Company and Consolidated Edison. I think utility companies like NextEra are very interesting. Lena, I am in Ford. Big dividend. I like them. Ooh, Enbridge. Like Enbridge. Did Southern Company dump? When did that happen? Look at that. Whew. Like them even more here. Why are they going down? Jeffries cut them. Oh, okay. So they fell after an equity unit offering. I'm gonna have to look more into that. I mean, Southern at 3.5% dividends, interesting. Maddie Money, Southern Company. Maddie, why don't you just come on? Why don't you like me? Come on for 15 or 20 minutes. I mean, from REITs, I like Simon Property and Realty Income here. I do not own Chenier. Oh, yeah, that's right, Maddie. I forgot. I have a bad memory. What do you want me to say? No, Matt's in the middle of something, so. Yeah, I think I'm going to start doing some more due diligence on SMCI. I know a lot of people wanted me to look into that. They're down quite a bit, down 15% in the past year. We caught it on a pump, kind of the same setup. I think I'm going to do the research tomorrow on SMCI. Yeah, that's exactly the opposite you want to do. You want to under promise and over deliver, not over promise and under deliver. I mean, I've been wrong on Lemonade, so don't ask me about them. Vertiv is interesting. Look, there's a lot of interesting companies that are adjacent to AI. Eden, Johnson Controls. I think pipelines are interesting. Oh, Matt, you bought the latest Pokemon box? Very nice. Little alternative investments for Maddie. Arista Networks is awesome. I like that company. They're really good. I really like Cisco. I've been saying Cisco for a long time. I'm not changing my stance on that. I think Cisco is a great company. So this is interesting. The post is starting to gain traction. We'll see where it is in the morning. 5,000 views so far. Oh, whoa. Is it really freaking snowing? Are you freaking kidding me? How much snow are we supposed to get? It's not supposed to be that much. Half an inch? Supposed to stop around 9 a.m. Great. I don't even want to know what freaking Wisconsin feels like right now. Blizzard of 93. I do. The nor'easter was freaking crazy. Yeah, when's the last time it snowed in December in New York? That's crazy. How do I pick stocks? I do a lot of freaking research. I like VRT. Vertiv is a good company. And if we believe in AI and data centers, then I gotta believe it's going to continue to do well. Lena, I do not own Nebius yet. Looking at it. I actually bought BMNR on Friday again. I have not looked into freaking Amcor yet. Everybody talks about it. I haven't looked into it. I have no idea what percentage BMNR is for me. I should vote on the BMNR proposal. I'll look at it. ET for the win. I'm with you. I like energy transfer a lot. I mean, look, I do research by going through the financial statements. I go through the income statement. I look at liquidity on the balance sheet. I specifically look at cash flow statement, how much stock-based compensation there is, if a company's free cash flow positive, they're buying back shares, paying a dividend, look at forward estimates, and I look at total addressable market, and then I try to get an understanding of what they do, who their competitors are, what the strategic mode is, and model out where I project their free cash flow to be, how they can use it, if there's other verticals they can get into to start. I may do a rebalance on my dividend harvesting portfolio, but I'm not rebalancing other stuff. I model out by looking at previous growth rates, where management is expecting things to go, where the analysts are expecting to go, and then what I'm expecting it to do. And then I model out several years, and then I break it down to diluted EPS and figure out if I think it shows a value or not. I mean, I look at insider buys, but that's not the end all be all. I mean, you can find a lot of my research on Seeking Alpha. Like I put out 4 or 5 articles a week there. So I mean, if you look at just any article from the Mag 7 that I put out, it shows a lot. So oh, freaking Chesapeake disappointed me. I mean, nothing's a 4 or 5x, but I wouldn't be surprised if CoreWeave and Nebius do well. I like QQQI. It's one of my favorite covered call ETFs, along with GPIQ, which is the Goldman Sachs one. Lena, I don't really have any thoughts on TEM. No, I have a regular job. I do Seeking Alpha and YouTube on the side. I'm just a freaking finance nerd. I'm not interested in Corsair. I've looked at them. Not interested. Oh, interestingly enough, I have an article on SCHD coming out Monday morning. I just wrote one this morning on it. Oh, Maddie, you guys, this guy, Matt Money, just text me Rocket Lab on X, mission success, payload deployment confirmed. Why aren't you bullish, Steven? Freaking Matt. Guys got jokes. Guys got jokes. Chels is in the space mob. I think June's in the space mob also. Well, Arlie, that doesn't suck at all. No, I do not own or am I interested in quantum. I have a very fifth grade rudimentary analysis that goes something like this. None of these companies are going to figure out quantum before Alphabet or IBM. So I'm not interested. I can be 100% wrong. I'm just not interested. Oh, Rocket Money had a big reversal. I didn't even know that. Good for them. Yeah, I wouldn't be surprised if the government has quantum. I don't know about SpaceX IPO. Let's see what the numbers say. I'm not in healthcare stocks. The next thing I'm going to buy is probably just going back into more of the stuff I already own. I like my portfolio. I do not own CVS. Yeah, I mean, I agree, Rob. NVIDIA and Meta, they're the ones I'm really interested in right now. Hims, I don't know. Definitely not buying Netflix. If Broadcom keeps falling, I could be enticed. I like Fortinet. I own VC. Flat space theory, love it. I mean, Matt Money told me the earth is flat, so. I'm not trimming anything now. Yeah, Iris, I agree. I think NVIDIA just looks cheaper. Big Bear AI? Nah, no, I'm not doing that. I can't decide between CoreWeave or Nebius, so I think both. I'm not into small caps. Can't do it. I talk about all my positions, so there's no secret position that I'm holding off on. I don't know if I'm going to do an alternative asset tomorrow. We'll see. I don't. Why are you guys trolling me with this Duolingo stuff? Come on. Jonathan, no. Amazon will likely be the largest company by revenue. What's wrong with Duolingo? I mean, where do I start? I'm just not big on the whole learning another language thing as a stock. I'm not into it. Oh, Chels, why are you asking me hard questions this late at night? Amazon's such a beast. I love Amazon, but I think right now it's NVIDIA, but I really like Amazon. Don't make me choose between them. F1, I hope Amazon's dead money for a little bit. I mean, think about this. They're expected to be the first $1 trillion revenue company. They have an 11.2% profit margin. If they can get to a point through robotics and AI where they can get their margin to 18%, then in 2029, that is $180 billion of operating income. That's more operating income than any company is doing right now. And we've already seen NVIDIA touch 5 trillion. Amazon's 2.5 trillion. I think Amazon could be 5 to 7 trillion in 2029 if margins expand through robotics and AI. And that's the story with Amazon right now. I don't have a fintech outlook. I don't follow fintech. I follow SoFi. I own Starbucks because I drink Starbucks, and I happen to like the company and the dividend. Man, Ferrari is something I should have bought at the freaking IPO. Yeah, I mean, race has been freaking ridiculous. You and me both, Chels. Amazon, I love that company. Amazon wants to get into the mail business? Really? I didn't see that. Yeah, I mean, SoFi is pretty great. We'll see what Noto does. Steve is getting a little sleepy. We're going to run it till either 11:45 or midnight and call it a night. I thought some of the boys would be on, but they're out doing things. I would rather be here with all of you. Would I ever get burned out by doing YouTube? Absolutely not. I don't lift anymore. There's nothing to talk about lifts. I don't lift anymore. I just buy the booster boxes for Pokemon. I still think we'll have a Santa Claus rally. We'll see what happens. Listen, they're very busy, Charles. They're busy people. I lift glasses of milk 100%. Favorite whiskey. If you want to go Scotch, I mean, I'm a big Johnny Walker fan, and Oban and Highland Park. You want to go bourbon, American style. Listen, there's no better price point than Buffalo Trace. Buffalo Trace is just so legit. Chef Mike. This is what I'll re-say for you what I said earlier in the stream. I am very happy that Amit hired somebody because I would like to see him take the channel to higher heights. And I think that he needs help with several things. So I am excited to see where they can go with this, who they can get as guests, what shows Amit can get on. And I think that this is going to be a very good strategic move to propel Amit's channel to the next stratosphere. So I'm excited for the next 6 months. I'm really hoping that Jess is going to be able to bring a few things to the table that really grows the channel more than what it already has. So I'm excited. Listen, if there's a lot of whiskey lovers in here, there is a YouTube channel called Bourbon Junkies. These two guys are so legit. I gotta tell you, I enjoy watching them. I mean, am I a cigar guy also? I mean, I got multiple humidors over there, so yes. No, she's going to be running his channel. I mean, she's going to be doing a lot of things that Amit just does not have the time to do. So I think we're going to see big things from his channel next year. So I'm really excited because look, I would like to see Amit on the Compound and Friends. I'd like to see him on All In. I would like to see him get on CNBC, and I would like to see him get other big names. I mean, he's already gotten Vlad. He's obviously gotten Karp, but I mean, wouldn't we love to see him interview Elon and Jensen? I mean, look, I would love to see that for Amit. So if hiring Jess is going to help propel the channel to those levels, I can't wait to see it. So he was on Bloomberg, not CNBC. But yeah, I mean, listen, I want to see good things for him, and I want to see the channel do good. So I am very happy that he is this supportive and thinks that she's going to do really well. So I'm happy. Can we buy a mid stock? That would be great. You're never going to see me on CNBC. They don't want me. I should start drinking wine. I haven't had a glass of wine in so long. You know what I'm going to do? I may make a porterhouse tomorrow and have a glass of freaking wine. I think I'm going to do that. I think I'm going to do that. I think I'm going to go get a bottle of freaking Stag's Leap or Opus or something. Yeah, wine and steak, nothing better. Charles, what type of wine are you drinking? I feel like you're drinking like a Riesling or something. I don't know why. We're gonna see if Matt and Chris want to do something tomorrow. Sometime in the afternoon, probably like 3 or 4. I'm planning on doing something. Yeah, Boiler Room's a great movie. I would like NVIDIA to finish above 180. I mean, I said 185 was my year-end target, so let's say. All right, Pinot Grigio, I was somewhat close. Yeah, I'm a red wine person, but I only drink wine if I'm having a steak. I don't drink really anymore. Yeah, Sicario is a great movie. It's not giving up drinking, it makes you feel like crap the next day. I mean, I don't know how to pour. I'm not allowed to pour for anybody because I just stop when the freaking glass is full. Sicario 2 was good. So I think tomorrow we're gonna talk about what stocks I'm looking at next week and what I'm thinking about doing for the portfolio for next year. And Maddie, if he comes on, we'll be talking about Rocket Money. Let's see. Sir Joseph Carlson blocked me because I responded to him with a very long post. He asked me several questions. I responded with another like 1,400 words at like midnight. And he thought I was engagement farming. And I didn't even know what that meant until Tanner told me what it meant. And he blocked me. So I don't know. Whatever. Yeah, I agree. I hate the way drinking feels the next day. And with all the people in Wisconsin, I mean, we should do a meetup in freaking Wisconsin. Jesus. I know I don't even leave New York. I know. I know. You know what? I should come out to Wisconsin just for the dairy. You're right. I'm not a hot dog person, so no. No, I don't eat New York City street food. I would have never tolerated old Twitter. You're right. The Bears are not coming out to play yet, everybody. The Bears are not coming out to play. I wonder what this is going to be like tomorrow morning on this freaking post. I mean, it's late. They're probably hibernating. You're right. Yeah, but not as many replies as I thought there was going to be. That's the thing. You know, I never get replies from the Bears with anything of substance. Just like you're an idiot or something like that. I put some bullet points in here for them. Bears are covered in snow. I agree. I have not, Lena. I'm not into seafood. I do like Cisco, Tommy. Big Cisco fan. Does that look like Joseph Carlson right there? Does that look like Sir Joseph Carlson? I feel like it does. I feel like it does. Yeah, we should turn Twitter into Seeking Alpha. I love that. If only that was Sir Joseph Carlson, that'd be freaking great. All right, everyone. We got a lot accomplished tonight. See if the Bears respond tomorrow. Maybe tomorrow we're definitely going to take a look at the post. We're going to see how the Bears responded. We will go over a few things, plan out the week. Everybody go relax. And I'll see everyone tomorrow. Charles, yeah, I may retweet it tomorrow. We'll see. All right, everyone. Have a great night. I will put a link out tomorrow. The stream will probably be around like 3 or 4 o'clock, that area. Go enjoy the rest of the night. And I'll see everyone tomorrow. Bye-bye for now, as Tanner would say. Thank you. I really do appreciate everybody hanging out. Really happy that you guys enjoy the content. So thank you so much. Appreciate all the support. Good night.